So I'm gonna do a next week's bias video, and then I'll go into a teaching of consolidation and distribution, how that market cycle kind of works, and kind of the logic behind it all. So basically, since kind of the beginning of this month, the 13th of January, we've been in kind of a spooling program downward for the past 10 days. And that's fine, I guess, right? So we just reached into a higher time frame discount, creating a market structure shift as well, tapping into a a discount array, swept a ton of liquidity, all this out, all these engineer lows, all that sort of thing, and then filled this huge fair value gap. And so my bias for next week is higher prices up back into this opening gap, and taking out all these highs and then repricing lower. But I think for next week we're going to be bullish. We're going to shift market structure there, look for entries in here, and then I just think shift here, sweep this low, fill a fair value gap in there. It's going to look like something like basically sweep, tap into array, come down here, get an entry, target, I don't know, this high or this high, end of day, and then everything else is going to be kind of sluggish, and then just kind of chop up in here until, I don't know, next week. Hold on, I think that was too long. Monday, no, it wasn't, but kind of chop till maybe Friday, but I think Friday it'll be kind of pushed back down. So it's just, I don't know, say it just consolidates to Friday. This looks horrible. But Friday I think it's going to reprice back down into this range. And fill the majority of the liquidity and imbalances we made on, I'd say either Monday or Tuesday. That's going to happen during a London or New York session. But yeah. So that's my bias. And so what that means for doing my bias on here, this is going to mean lower prices on the euro because the dollar's going up because they're mirrored pairs or whatever. So price goes up on the dollar, price goes down on the euro. So we're going to have lower prices in the euro for the next week, and then we're going to shoot up in prices the week after that. But I think there's going to be one or two big range days pushing up because it has to travel pretty far this week. That's better seen on here. I don't have any analysis, but we're looking for it down here. So it's going to probably range 200 pips. 150. So, yeah. No, not that. So basically, we have them side by side. This one's mirrored, so it's easier on the eyes. Hold on. But yeah, prices in this higher time frame premium array or discount array because it's mirrored now. But yeah, price is gonna reach down here. It's a gap. That's why it doesn't hover over it on the euro. But basically, yeah, we're going to fill in this next week. Shift market structure here. Come back up. Sweep. Short. Target low. Low. We'll probably either target here or here from our short up here because that's still a huge range. 70 to 120 pips. But it'll only be day trades. So basically, that's what I think it's going to do for next week, is just be really bearish for the dollar and reprice after this higher time frame market structure shift. So basically, going into my teaching of accumulation and distribution, how what the role it plays in the market. So basically, accumulation happens when institutional traders, funds, banks, etc., are building large positions without causing significant price movements. So this usually happens when price goes sideways. So sideways market, expansion. Sideways market, expansion. Sideways market, expansion. And this is a reoccurring thing. So long term, sideways market. So sideways market, expansion. That's just kind of how it works. It's just a sideways market, expansion. Sideways market, expansion. A little bit of sideways market, expansion. Sideways market, expansion. But yeah, so basically how this functions in the market is just the smart money just building their orders in low time frame or low like volatility times, like after New York AM, like that sort of thing, or just like high news weeks. But yeah, it like tight consolidation like this, you can see it get swept in the London Asian session, swept in the London, swept, and then distributes higher. But yeah, you can play around with models like that where it's Asian range, sweep, distribution, and this is a model ICT teaches on his YouTube channel, and we'll go more into depth. But yeah, so this is a good example of a setup that is takeable. So it's consolidation, sideways market, all throughout the day, building orders, and basically how this works is sideways, building of orders, right? Manipulation, kind of stopping out all the liquidity resting under here. Liquidity, lots of liquidity. So it swept all of that, and this was before London Open, and that's kind of how ICT teaches it, where it's a sweep after midnight, which is Asian range close. But yeah, so before London Open, he teaches that there's a sweep, and then right around London Open, it just higher volume and it just distributes. But yeah, so consolidation, manipulation, distribution, and a fair value gap or imbalances filled in here, tapped into I didn't tap into that. But yeah, it's just super reoccurring. And it's just a crazy thing to look for. Accumulation, manipulation, distribution, accumulation, distribution, accumulation, distribution, accumulation, distribution. It's just an insane thing. And if you realize how much the market cycles from consolidation to distribution, it's just insane. Because, I mean, it happens with news too. It's just consolidation, 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 consolidation. And there's only a few types of markets. There's only consolidation, distribution, what else? Reversals. And then there's one more other market cycle, but the market can't really be doing that many things. It's either in consolidation, distributing, or just in a range. I mean, reversing. But yeah, so this mainly happens when institutions go in the market at low volume and just build their orders kind of at the price they want it. And yeah, so, and then they'll do this when they're most active, like in the London and the New York AM. That's just kind of how it works. Kind of ignore this. I haven't really gone into that much. But yeah, so summarize this all up. It's just market always ranges from consolidation to distribution, and it's a cycle that you can always catch. So, and it's just a model you can play with when you understand how it works with consolidation and distribution. So I hope this found y'all found I hope this was found insightful, and yeah, y'all take care.